All right. Good morning, everybody. Today is Wednesday, March 1st. Happy hump day to everybody. Currently, we got Neil Kashkari speaking in Sioux Falls. Not really much coming out of this that we haven't heard from him already, but we did get an article yesterday saying that he was a third member calling for 50 basis points at the last meeting. Let me try to find the article if I can. Right here. From Market Watch, Minneapolis joined St. Louis and Cleveland in pushing for 50 basis point hike at the last meeting. So, we finally got the mystery Fed member out of the way. Good morning, Gary. Good morning, Tyler. Good morning, Irfan. Good morning, Eric. Morning to you all, and happy Wednesday. Happy hump day. So, not really much that's coming out of his mouth at the moment. So the big headline so far, inflation is very high. We already know that. Fed's job is to bring it back to 2%. Says inflation is not being driven by the labor market as of right now. So he's not seeing a wage price spiral currently. But he was saying that it was more the impact of, the crazy fiscal printing that we did 2020 and 2021. Also, combined with the Russia-Ukraine war, combined with the supply chain shocks, and I would generally come to an agreement with him on that. But a lot of it was driven by fiscal policy and printing $5 trillion in a matter of only 2 years. He says that we are concerned that rate hikes so far have not brought down services inflation. We're in a hot labor market. And December, I thought Fed would need to get rates to 5.4 and hold. I lean towards continuing to push the rate policy path versus his December view. So he might be even pushing for higher than 5.4. We might be seeing like 5.5, according to Neil. Of course, he is just one member of the, 12 different districts that there are for the Fed, so you can't just rely on his word and his word alone. But markets just opened. We are down 0.2%, currently trading at the 395.25 mark. We got a 397 resistance up top. And then down below we have 389.75, and up top we have 401.44. Pretty doubtful that we'll get to either 389 or 401 by the end of today. Could be a decent iron condor opportunity. If the pay is okay, that is. If it's not, then not worth taking the trade. But let's see. SPY. Today's expiration, assuming that we're going to stay below 401, that's only paying 3 cents. If we go one strike price lower, saying that we'll stay below 400, we get paid 7 cents for that. And then if we assume that we're going to stay above, let's call it 390, we'll get paid a total of 13 cents in credit. That's not a bad deal, I would say. I think I'd be more worried about going to 400 than I would be to go into 390. Depending on how we react to this 395.25 mark. Hi, Cameron. Welcome. But we're seeing the 10-year on the rise this morning at 3.96, so closing in on the 3.98 high, but still not clearing out of this range that it's been in for the last week and a half or so. So it started at 3.9, and it's been between 3.9 and 3.98 for 1, 2, 3, 4, 5, 6. This would be the 7th trading day in a row that we've seen the 10-year Treasury rate not really moving. We are seeing some downward pressure in the dollar, currently trading at 104.33. So that's pretty significantly lower than we were last couple of days. We were trading at 105.35 for the dollar. Now it's 104.34. So a decent drop in the dollar, but still kind of hanging up compared to where it's been trading since the beginning of February at the lows of $100.90. Thank you. 10 a.m. data today? Yes, we do have some 10 a.m. data today, I believe. If we go to the economic calendar, we got Kashkari speaking as of right now until 10 a.m., I believe. And then you have manufacturing PMI, so that's going to be at 9:45 actually. You have construction spending month over month. Let's see what else. ISM, manufacturing, or employment, I should say. New orders, PMI, and that's about it for the 10 o'clock data release. So the manufacturing PMI, this is basically a proxy for our supply chain. So if we see this number coming in better than expected, then that means that our supply chains would be improving over the next year. That would be disinflationary, which would be bullish for the markets because rates would go down. But if this comes in worse than expectations, that means that our supply chains are continuing to deteriorate. And with prices being based on supply and demand, if supply is going down because our supply chains are getting worse, prices are going to go up. So more inflation, higher rates, lower stock market. So that's what to look out for manufacturing PMI, both at 9:45 a.m. In about 10 minutes, and then also at 10 a.m. So we're getting 2 manufacturing PMI reports. Might be trading pretty flat until then. We are trading at yesterday's lows just about. If we're looking at the Qs, currently trading down to 292.50. Let's check in on my QQQ put debit spread that I had opened. That one is currently up a whopping $12. I'm assuming that it's going to be below 290 by the end of the week and early next week. So on Monday of next week, I'm assuming QQQ will be down to 290, currently trading at 292.5. So we're getting pretty close to the mark that I'm looking for. Just not quite there as of right now. I picked these up for 33 cents. I might be willing to give them up for 40, 45 cents. Looks like SPY is catching a bid at that 395.25 mark, whereas QQQ is actually below the support level that would correlate with that 395.25 for SPY, which would be 292.90 for QQQ. We have Tesla with a event today. They have their Investor Day, I believe, March 1st, which is probably gonna amount to a whole lot of nothing. You might be it might be a buy the rumor, sell the news kind of event. Usually, whenever they have these big events like Battery Day, AI Day, things like that, people usually just end up selling the stock off. So this might be a decent opportunity to either go short or do a call credit spread. I think call credit spread would probably be your best trade, assuming it'll be under like 205, 210. You could do like a 5 wide spread. Let's check it. Tesla. It's already fallen a decent bit this first 10 minutes in the market. I think it's probably going to be at like 7 o'clock. So unless, well, they moved their headquarters to Austin, Texas. So I wonder if it's going to be a little bit earlier now than it used to be, because they used to host it over in California, which meant that it would get postponed until like 7 p.m. or something like that. But maybe with the new headquarters in Texas instead, they might be doing it earlier. It's at 4 p.m. Eastern. Good stuff. Yeah, it was really annoying whenever they would do the super late ones just because they were based in California. But yeah, I'm looking at the call credit spread, 205, 210, currently paying, well, that's the put side, so that doesn't make sense for me. 205, 210 is currently paying 170, so you're risking 330 to make about 170. That's an okay risk reward, I would say. I would be a little bit worried about possibly going over 205 sometime by the end of the day, so you could get maybe a better credit than what you'll get out of it right now. Currently, it's paying 180. I would imagine if it's going for 205 later on today, you might be able to get 200 for it instead of 180, so an extra $20, $30 in credit you might be able to snag out of it. Glad that I got out of that Target put credit spread because now that one is starting to be in the money. And then the Zoom, that one I could have held a little bit longer, I guess. I was assuming that it would be above 71, currently trading at 74.50. Fulgent had their earnings report too. Pretty disappointing, in my opinion, as an investor for this company, coming in at negative 48-cent earnings per share. This did end up beating their estimate of negative 78-cent earnings per share, and the revenue came in better than expectations at 67.7 versus I think 55 million expected. The biggest disappointment for me as an investor is that they're projected to continue to lose money in 2023. I would have imagined that they would have been continue to be profitable like they have been for the last couple of years. Not going to say that I'll sell out of it, but it is just kind of, a little bit disheartening that they would start overspending, especially with as little cash balance as they have left. They have a lot of cash and cash equivalents. So usually that's like bonds that they can sell off in order to generate cash. And then they have a bunch of shares of their stock that they can sell off that they've been buying as of recently. But right now it's trading at 33. They ended up beating on revenue, beating on earnings. So if we go over to my Notion page that I wrote up yesterday, I would have thought that this would have had their stock above 33. Currently it's trading at 32.5. So it's close to where I thought it would be. But with that guidance showing negative for 2023, not so certain on it. Maybe, below 32 would probably be better. 31, 32. Maybe even as low as 30 given the negative earnings per share estimate. But 10 years still holding, 3.96. The VIX is slightly up this morning, up 0.3. The Dow is actually hanging, positive 0.1. Russell 2000 is up 0.1%. That's a little bit shocking that that's still up where QQQ is still down. I wonder if we can take a short opportunity for IWM here. Might be half decent. You got that 188.20 mark. But it does seem to be rebounding first thing this morning. Kind of just trading in a range the last couple of days, right? Between 187.50 and that top at like 189.70. So it's not really moving much on the 2-day time frame. If we're looking at a more long-term time frame, it's been in this range for a while, ever since February 22nd, I guess February 21st, if you want to count this too. It's been in that range for 1, 2, 3, 4, 5, 6, 7 trading days. Ooh. It's definitely building up momentum, one direction or the other, depending on which way rates want to go, which way the dollar wants to go. What does IWM do or measure? IWM is a Russell 2000. So this is 2,000 small cap companies, so companies that are less than $2 billion in market cap. So it's just it's like the S&P 500 where it's a ETF of a bunch of different companies, but instead of being large or mega cap companies like the S&P 500, this is full of small cap names. So companies less than $2 billion of market cap. Sorry, got distracted there. All right, so dollar index trying to make its way back up, not quite managing to see yesterday's lows just yet, which were 104.42. If you do manage to get in that range of 104.42 up to the high of 104.89, then you might see some more downward pressure for QQQ, SPY, overall market. I really feel like it's in the balance of this 10-year treasury rate. Once this starts to, if it starts to head back up to 3.98, up to 4%, then we might see a breakout for the dollar. But until then, we might just see the dollar continuing to either lose value or trading flat. Any comments on Tesla? Yeah, I think it would probably be going down as usual. I don't think that there's going to be much that comes out of the event. So I'm looking at a call credit spread. I just want to get it at a better price than what it's going for right now. It's going for 180 credits for this Friday's expiration, assuming that it's going to stay below 205. I might even extend the expiration date to next week just because there's only a couple more days until expiration. Let's see, 205, 210 call credit spread expiring March 10th is paying only like $10 more. So I think I'd rather cut the expiration short. The bid-ask spread on it is very tight, which not really surprising given that it's Tesla and given how much how many options are traded on Tesla. Let's see if I can get, I'd say 185 for it would be pretty decent. It looks like I might have to go with 180. So I'm risking 320. Let's see if I can go a little bit higher. If I do a 207.50, 210, I get paid 80 cents credit for 170 risk, so not as good of a deal as 205, 210. All right, now I might be able to get a little bit higher credit. Might be able to get 190 out of it with this little balance that we're getting for it right now. Oh yeah, we have the ISM manufacturing report at 9:45. So we're about to get that right now, which came in at 47.3 versus 47.8, so worse than expectations. Supply chains are going to continue to get worse, but this is up from 46.9, so this is a small improvement from what we saw before, and it's not that much of a miss, so it's probably going to be a pretty neutral event. We got some more words from Kashkari. December, I thought Fed would need to do 5.4. Actually, that's the last comment that we got out of Kashkari at 9:28. But yeah, the PMI report, manufacturing PMI, slightly worse than expectations, slightly better than it was last month. So you might see either rebound or pretty neutral price action today. So maybe a put credit spread could be a decent play to take on. You have another manufacturing PMI report that's coming out at 10 a.m. So if that's any different, that could change this shift the sentiment back down. But let's see. Never got filled for the Tesla call credit spread, assuming that it would be below 205, but let me see if I can get a SPY put credit spread, assuming that we're going to be bullish with this report this morning. All right, so never really went below 395. Ended up holding that 395.25 mark. If I go with 394 strike price, I'm getting paid $36 in credit. No, that's for March 10th expiration date. That makes a lot more sense. Today's expiration, you're getting paid 20 cents credit, 21 cents. It's a decent price, I would say. Let's see. Probably wouldn't put a ton on it just because of how volatile the markets have been. Usual like $300 of risk, maybe 200. Whoops, that is the wrong price for that. 0.2. Making its way back above 50 on the RSI almost. 49.3 at the moment. And I just got filled for that put credit spread. All right. New options alert. This is a day trade. Premium members. Just opened a new SPY put credit spread expiring today, which is the first of the month, 3/1 at 20 each. All right. Manufacturing PMI came in only slightly worse than expectations and a little better than last month, showing slight optimism for our supply chains, which may reduce inflation, lower interest rates, and push stocks up. Coming close to that 397 mark, definitely above 50 RSI now. Any important news to look out for that would affect the NASDAQ? Well, that would be your big news for today. That would affect the NASDAQ, especially NASDAQ is more interest rate happy. So whenever interest rates are moving, the NASDAQ will move more than the S&P will. So you saw the NASDAQ go from down like negative 0.2 or negative 0.3. Now it's positive, whereas SPY was only down like 0.1%, and now it's slightly positive at positive 0.5. 10-year ended up coming down after the report at 9:45 from 3.955 to 3.95, and now it's just sitting slightly above that. So if this continues to come down, if this goes bearish, then the market should be pretty bullish or neutral today. All right. Good stuff. And then the dollar's reaction to that was, let's see, down slightly, but not really moving much. Still above 50 on the RSI. So this keeps holding 50. That would be bullish. But if it ends up going below 50, that would be bearish for the dollar, bullish for SPY. Currently trading at 396.43. And then Qs is trading at 293.5. Let's check out Tesla again, see if it made its way back up at all. No, not really. and I didn't get filled for the call credit spread. Unfortunate for me. Let's see, Tesla. Let's see if I can re-put that order. 205, 210. It's going for 175 now instead of the 180 that I was looking at earlier. So not getting as good of a price for it as I was before. Oh, finally got filled at 180 for it, assuming Tesla will be below 205. So good stuff. New options alert. This is a swing trade. Just opened a new Tesla call credit spread that expires this Friday, which is the 3rd. Yep. At 180 each, or just 180. I only opened one of them. Tesla Investor Day today. Usually Tesla events are buy the rumor, sell the news, so likely to head down after the event. I think there's a lot of anticipation of them announcing the compact car. I think it's like Model 2 or whatever. And from what I have kind of read through Twitter about is that Elon would want to make that like its own kind of event. So I don't think that they're going to unveil the Model 2 as of yet. It'll be interesting to see what exactly they do unveil, though. I will be interested to actually watch what goes on at Tesla's Investor Day, but usually it's going to be buy the rumor, sell the news, so. Especially considering how high Tesla is trading at, 200, 205. So, we shall see. 10 years remaining neutral, even after the ISM manufacturing, or the manufacturing PMI. And then the dollar index is actually a little bit higher. Currently 57 RSI, but it's still in that, 15-20 minute range that it's been in. Rivian got crushed again as expected. Let's see. Rivian. They had their earnings report coming in at negative 173 versus negative 186 expected. So earnings was slightly better than expectations. If you're looking at the yearly chart, this is almost a new low for it. 1528 is a 52-week low. Let's check out their earnings from yesterday. Loss narrows as revenue rises. Set 2023 production, adjusted EBITDA, guidance. Why wouldn't you say what the guidance actually is? That's kind of dumb. Produced 10,020 vehicles and delivered 8,054. They have a large discrepancy between production and delivery. 2,000 vehicles are like 20%. I wonder if they're building up inventories or if they're able to sell everything that they're making. You would think with that little of vehicles produced, they'd be able to sell every vehicle that they make, but that would be really shocking if they couldn't sell 10,000 vehicles. Some recall news on Rivian. Yeah, we've seen a lot of recalls, not on Rivian, but even Ford and their Lightning as of recently, with some of their batteries catching fire. Let's see. Ford Lightning recall fires. Initially paused production and shipments of the Ford Lightning in February due to potential battery issues, and a day after a battery fire. So, you know, that's pretty. I wouldn't say it's very common in electric vehicles. It's a lot less common in electric vehicles than it is for traditional gas-powered engines, because a gas-powered engine is literal combustion, internal combustion engine. So there's a bunch of moving parts that can, ignite. The problem with electric vehicle fires versus a regular fires, they do burn a lot hotter, a lot longer generally. So that can be potentially more dangerous. But considering that there's a lot less EV fires than ICE fires, it's overall beneficial, I would say, to switch to electric in terms of the fires. But yeah, kind of troubling news out of Ford. That was about a week ago, so I'm a little bit late for that news, but they got some more defective batteries. And this just kind of shows, Tesla's edge, I guess, in making electric vehicles, considering that they've been doing it for 11 years at this point, ever since the Model S. Well, that would be like 2012 was when that came out, and that's when they started to mass produce. So these companies that have just started over the last couple of years, they're still kind of refining and fine-tuning the battery and the powertrain that comes along with it. So it's a lot more difficult for them than a automaker that's been doing it for 10 years. Like if Tesla started making regular ICE vehicles, regular gas-powered engines, they would probably have a lot of trouble doing that. But, Toyota, Ford, General Motors, the ones that have been making them for decades, they don't have any issues just because they've been making them so long. So now it's kind of the opposite. Tesla's been making them for 10 years, which isn't a lot of time. But they have more experience developing the powertrains for EVs than what you'll see out of the newcomers, Rivian, the new Chinese automakers like NIO, Li Auto. I'm not sure if there's a lot of problems with their vehicles, but generally Tesla just has a lot more experience with it, so they don't have as many issues whenever it comes to their batteries. Now, whenever it comes to their panel gaps, things like that, that's a different story. Minneapolis Kashkari says he repeats he is deeply skeptical about cryptocurrency. Interesting. And he says, we are not in a recession. I don't know if we can achieve a soft landing. Huh. Interesting. That's the second Fed member that said that we might not be able to get away without a recession. I think it was Fed Loretta that said it last week, and now Kashkari is echoing that, saying that we might not get the soft landing that the Fed has proposed to us. All right, so the PMI report came in at 47.7, so basically the same as the last report versus 48.0 expected, and this is up from, 47.4. So slight improvement, slightly worse than expectations, so basically the same thing that we got out of the last report. Yeah. Manufacturing PMI. It's basically the same report that we got at 9:45. Construction spending came in at negative 0.1 versus positive 0.2. Not sure if that's going to be a big deal for the market, and this is actually up from negative 0.7 prior. That's more like infrastructure kind of news. The 10-year did end up popping on that ISM manufacturing PMI. Interesting enough, went all the way up to 397, but then ended up pulling back immediately for it. Dollar is going a little bit higher, so this might be troublesome for SPY. We still got that 395.25 mark to watch. Let's just keep an eye on the put credit spreads that I had open earlier, currently down by $3. The Tesla call credit spread's up by $7 at the moment. The put debit spreads I got for Qs basically break even at this point, and I think that Fulgent made its way back down to 31. Yeah, down by 5% today. So that's a drag in the portfolio. Can you explain how the Treasury chart affects the market? Yeah, so it has an inverse relationship. So whenever the Treasury yields go up, the 10-year is probably the most watched. So this is the 10-year Treasury yield. Currently, it's at 3.96. You're going to read it as 39.6. But you divide that number by 10, the actual rate for the 10-year Treasury yield is 3.96 right now. And whenever this goes up, this pushes equities down. The reason for that is because whenever rates are going up, the cost of borrowing money goes up whenever interest rates are going up. So it costs more money to grow a business by using debt. So companies that have a lot of debt will be paying more in order to pay off their debts. So if you're looking at something like, what's it called? Carvana, for example, this company has a shit ton of debt and they're basically near bankruptcy at this point. And since it's costing them so much more money now with the rising interest rates to pay off their debts, it's not going to be great for their company. So their company is going to be affected by this more, by interest rates going up, than a company such as, say, Walmart that's been generating a lot of cash for a long time. They don't have a lot of debt on their balance sheet compared to the amount of cash. So stocks like Walmart or very well-established companies are going to be less affected by these rising interest rates. But generally, whenever interest rates go up, stocks will come down. And you'll also see a rise in the dollar generally whenever interest rates are going up, because the dollar becomes more sparse, right? So the way that money is generated, for the most part, is by borrowing it, right? We borrow on credit cards, we borrow student loans, we borrow car loans, home loans, like all of these things that cost so much money, we get it by taking out debt. So now that interest rates are going up, less people are going to be taking out debt, so there's going to be less dollars in circulation. So whenever interest rates goes up, the dollar will go up with it. Currently, the dollar is at 66 on the RSI, so that is bullish for today, which is probably going to weigh negatively for SPY. QQQ currently trading at 292. And QQQ is going to be affected a lot more than what you'll see for SPY, because QQQ is heavily weighted towards, you know, high growth tech names that have borrowed a lot of money over the last few years whenever interest rates were low. Whereas SPY is a little bit more balanced. It is still very tech heavy, you know, with Apple, Microsoft, and the big trillion-dollar companies. NVIDIA, not a trillion-dollar company, but it was pretty close to it at one point. But these companies that have grown a lot over the last few years, that took out a lot of debt in order to experience that growth, they're going to be affected a lot more than, again, like Walmart, Coca-Cola, things like that, which the SPY has, but QQQ doesn't have in it. The rate is variable for them, unlike the mortgage, which is fixed. Well, the mortgage rates are always changing, right? It depends on when you get in. If we look at the 30-year mortgage, let's see. 30-year mortgage rate, Fred. If we watch the 30-year mortgage, this has climbed a shit ton ever since the interest rates started to go up at the Fed. So the Fed has a direct impact on where interest rates are going. Let me see if I need to close out of this SPY put credit spread right quick. With the dollar pumping at the moment, with the 10-year at 3.996, that I think is a reason to get out. So I'll cut my losses for this. I opened them at 20, gonna close them at 31. I think I got cheated on the price there, but that's okay. But yeah, the 10-year just went close to 4, so definitely not a good sign for the markets. Closing options alerts, premium, just cut losses on the 393, 394, credit spread expiring today, 3-1 at 0.31 each, and that's SPY. All right, so yeah, you're seeing the 10-year now finally reaching that 4.0 mark. So if we do end up breaking the 4.0, you're probably going to see an immediate trigger for the dollar to go up a decent bit. But what I was talking about with the 30-year mortgage, right? Back in March of 2021, whenever the Federal Reserve started to increase interest rates, this was at, let's see, March of 2021. Actually, we'll go by January before interest rates started to rise. December of 2021, this was at 3.0. Now it's at 6.5, right? So you're paying basically double the amount of interest now on a home loan as you were paying back in December of 2021. So the people that got in early in December of 2021, they're sitting pretty with their low interest mortgages if they got a fixed rate. Whereas the people that are buying now are paying twice the amount of interest that the people that bought in back in December of 2021 are. So usually this means that, home prices will correct downwards, and we have seen a decent correction in home prices, but not enough to make the mortgages the same that they used to be. I'm not sure exactly how much home prices have fallen, but I think on average about 10% or something like that. But the increase in interest rates hasn't made up for that drop in price. You're paying probably like 30% more on your mortgage payment now versus what you were paying before, even after the price drop. With Fulgen expecting to lose money next year, are you still planning on dollar cost averaging and increasing my position? It's kind of hard to say. I was very disappointed with them saying that they're going to be losing money for the year, and kind of weary about their cash balance. But considering this is only like a $6,000 investment for me, making up like 10% of my net worth, I think that I'm okay with continuing to build the position. Let's see, it's currently trading at 31.19, down 5% today. Let's see. Insiders probably made the right decision. Yeah, they've been selling off a shit ton of shares in Fulgen Genetics over the last year. Their stock ended up dipping 5.1% after the earnings. Not too shocking, but if we go to the investor relations page for Fulgen Genetics, no, I'm not falling in love with the stock. I just think that they still have a lot of growth ahead of them. My problem with this is that their cash balance is falling so low. I'm just wondering if they can sell off the they won't be able to sell off the shares of the stock that they bought over the last couple of years, just because they'll be diluting shareholders. And second problem with that being that, let's see, 10K. So they'd be diluting shareholders, and they'd be putting more sell pressure on the stock if nobody is willing to buy the shares. So that would lead the stock to go down. But looking at their last Form 10K, I want to look at their, let's see. They haven't filed the Form 10K, unfortunately. Press releases. Yeah. The only person that I haven't seen selling is the CEO himself, so it's kind of odd that everybody else is selling besides him. But looking at their earnings for this quarter, they ended up total revenue of $67.7 million, which is kind of small. This company has a market cap of like 500 million or something like that. Let's see. Fulgent Genetics, FLGT. Nope, that's not what I want. FLGT. Jesus Christ, come on now. Market cap is $900 million, and they're only making, what, $70 million a quarter, roughly. 70 times 4, 280. So it's trading at like a 4 price of sales, which generally pretty low. But then on an earnings basis, they came in at negative 48 cents on a non-GAAP, and then on a GAAP basis, they ended up losing 80 cents a share. So they don't have a positive earnings. And then for full year 2023, they're expected to continue to lose money. So if you look at, let's see, revenue is expected to be, oh wait, that's the full year 2022 results. Let's see if they give the guidance. I figured they gave the guidance for, yeah. Full year 2023, they're expecting $240 million in revenue versus 70 times 4. They're making 280 approximately right now at the current run rate. So the revenue would actually be decreasing. GAAP loss, approximately $250 a share. And then a non-GAAP loss of $125 a share. So not a profitable company anymore, which is, sorely disappointing. So might be selling cover calls on it now that, they're starting to lose money. It makes it a lot less attractive of a valuation than what it used to be. Can I share how your alerts have performed over the last few months? Yes, absolutely. So January had a pretty rough time. I think I lost, let's see, like 500 or 700. Yeah, 755, and then made back 1100 in February. So for January, the problem that I was having was the win rate at 52%. Usually my win rate hovers 70 to 80%. So considering that, 20% drop, I ended up losing quite a bit. My average loss was 175, average win 145, so negative expectancy. So for January, well, this isn't, lost 755, and then for February, positive 1100 as of right now, and then I still have some open positions that I need to log in. But 10-year treasury rate bursting above 4. Dollar is also going up 104.60. QQQ is currently trading at 291, so that's making that put debit spread that I opened a lot more attractive. So let me go and check that out. What account size do I have? So my total portfolio is $30,000. I have $16,000 in cash, $17,000 in cash almost, and roughly $5,000 in stocks. So for options trading, I'm using roughly about $8,000 for options. It fluctuates usually between like $5,000 and $8,000. But let's see. So that QQQ put debit spread currently up by $60 at the moment. I opened these for 33. They're trading for 44, 45 right now. So this could be a decent opportunity to get out of the trade. I want to get out of them for 45 a piece if I'm able to. 10 years pulling back from 4 again. But it definitely broke that 3.98 high that it kept getting rejected at. And then, like, the usual trade size for what I post in the trade alerts is like $300. So of the, $8,000 that I'm using for options, let's see, 300 over 8,000. Each position is like 4% of the options account. And I would generally recommend keeping each option less than like 5% of your options account, just in case you go into like a bad losing streak, you don't burn all your money. Besides options, what else do I do? Well, if you're talking about income, the YouTube channel, Trade Alerts, and I'm working on an app. And then I do invest in long-term. Long-term investments obviously haven't been doing well over the last year. Fulgent has been one of my main positions that I've held over the last year just because they were profitable for a good while, thanks to COVID boosting their earnings, and now COVID kind of going away. It's definitely taken a hit on their earnings. The stock was trading at like 180 at one point back in early 2021. I ended up buying this, I think, at like January. Started buying it at 60. Did end up buying it at like 160 at the top, and then just kind of kept dollar cost averaging into it. And now my average cost is 45 compared to trading at 30. So definitely not the wisest investment. It is a small cap company, which does impose a lot of risk if they're not able to come up with enough capital in order to sustain their business. The benefit of having like a large cap, mega cap company is that they can offer their shares, whereas Fulgent Genetics doesn't have that much value to offer. With a $900 million market cap, they don't have that many shares that they can sell off to come up with cash. So it's kind of a pain, I guess, of investing in small cap. But I have 5,000 invested in it. Let's see. 162 shares. Still thinking about buying more, but seeing their cash balance recently kind of worries me. But yeah, I do also trade crypto a little bit. I was dollar cost averaging for a while. Stopped dollar cost averaging once the shit hit the fan with BlockFi capitulating and going bankrupt along with SBF. I've been wanting to buy more, but the hassle of buying it with Ledger never really got used to figuring that out, so I haven't been dollar cost averaging. But I do own, let's see, for my crypto portfolio, I have 2.55 Ethereum worth 4,200 right now, 0.144 Bitcoin worth 3,400, and then 10,000 Doge worth 822. I'm surprised that Doge is actually above 8 cents. I think that's roughly where I bought it, either 8 or 9 cents for Doge. Ethereum, I think I bought it closer to like 1,800, 1,900. Bitcoin, I want to say, was like 30, roughly. But seeing the 10-year pulling back from 4. QQQ is still trading at 291.50. So you might see a knee-jerk reaction to the upside for QQQ if the 10-year isn't able to clear that 4 mark. Looking for a vanilla sector to get in on some put credit spreads or iron condors. I would say vanilla sector, you're looking at Dow Jones, a lot of the stocks in there, Coca-Cola, Walmart. Although Walmart has been pretty volatile as of lately, just because of earnings. But those kind of stocks would probably better fit. And then maybe like telecom too. So like AT&T, pretty stable in their share price. Been trading between, let's see, $18 and $20 for a while. Has gone all the way down to 17 and as high as 2050, but generally it's just been in that range. They do end up paying a dividend, so do be aware of that whenever you're doing cover calls. You could get assigned early if somebody decides that they want to exercise in order to receive the dividend, but their next dividend date isn't going to be until, looks like, April. So you still have a ways to wait a minute. April is next month, so maybe not. Let's see. This one was 10-1 and then 1-9. So yeah, it should be April or May. Let's see. AT&T dividend, ex-dividend date. I don't know if they've announced their next ex-dividend date. Previous was 1-9. Doesn't say when their next one would be. But I would imagine probably sometime in April, maybe May. But in the meantime, you could be selling cover calls on it. Or cash secure puts, wheel strategy, iron condors, maybe even a strangle. Could be good fit for that one, assuming that it'll be below or above like 18, 17, and below probably 19, 20. IWM is making its way back in the positive. The stock just doesn't want to drop for the life of it. Just wants to keep holding that bottom end of the range at 187.50. It bounced again at that price level. I feel like IWM is going to have a lot of sell pressure if the 10-year makes its way above 4 definitively. But let's head back to Robinhood. See if we can get out of the put debit spread for Qs. Got a SPY put debit spread, assuming that that's going to be below 391 next Friday. I'll probably still hold on to that one. And then this trade that I took a while ago, assuming SPY will be below 395 in March, on March 24th. That one's still viable, I would say. So let's try to get out of this one. The bid is 39, the ask is 44. Pretty wide in the bid-ask spread, which makes this a lot harder to get a decent profit out of it. The 10-year is just holding that 4 level, not going above it, not going below it by much. Let's check the dollar index. Dollar index is at yesterday's lows. If that continues to push, that's going to be where the pain is. Seems like this 200 moving average that I have on is very predictable. It basically got rejected right at that 200 MA. Might just end up keeping that 200 MA on my chart. I don't really like to go by moving averages, but the algorithms absolutely love moving averages, especially the 200 MA for whatever reason. Still a ways off of the 200-day moving average, though. In order for the dollar to be technically bullish, it would have to be above the 200 MA. Currently at 106.44 for the MA, and then 104.60. So still another, let's see, 2% that it would have to go up from where it's trading right now. All right, might be able to get out of these at 42, 43. Hopefully. Excuse me. All right, put the order in for 43. It's not too far off of the 45 mark that I wanted. Don't want to get overly greedy and not be able to get my order filled thanks to Robinhood. So close, but so far. Oh, gotta love Robinhood and their bid-ask spread. Eats me alive, man. Huh, interesting. Gold is still up at the moment. So gold is trading at 171, even with the dollar making a rebound. Oh, well, I guess the dollar is down today, so gold should react positively to that. But gold is trading at 171, so my Leaps call option that I have for gold is doing pretty well. I wonder if there was any reaction to what Fed Kashkari said, possibly diminishing the chances of a soft landing and not getting a recession. That's what he was saying. If you look at SPY, let's see if he has any other comments. Bridgewater exits Ray Dalio era with hedge fund overhaul, bets on AI. Job cuts eliminating 100 jobs in a workforce of 1,300 people. 100 over 1,300. That's a 7.6% job cut for Bridgewater. Huh. U.S. President Biden welcomes Eli Lilly. Price cut on insulin, calls on others to follow. Construction spending. And then that comment from Kashkar that I was looking at was saying that we are not in a recession. I don't know if we can achieve the soft landing. So that's the second Fed member that said that we might not get a soft landing and we could go into a recession. Jesus Christ, how am I still not getting filled with this? This is terrible. Terrible, terrible, terrible. I am 1,000% gonna get ripped off on this option. Really makes me want to jump ship to Aries. Let's see what Aries will quote me for. Oh, finally got filled on it. Thank God. Alright. Closing options alerts. Premium members. Just took profits on the QQQ. Put debit spread. Expiring today, which is the 1st. 3-1 at 0.4. Let's see. 3 each. And the strike prices that I chose were 290 and 291. Still do have downside trades with Tesla. So I could still make money if the markets continue to come down with the interest rates on the rise. 10 years just finding a balance at 4 and not really making a decisive move here. But it looks like the dollar might be making its decisive move. Currently at 104.61.4. Coming up on that 200 MA again. I imagine if we break that 200 MA, it could be similar to what we saw here, to where we get bullish price action after. I just wish the 10-year would make a decisive move and at that 4.0 level. The Tesla call credit spread is currently up by 30. Currently trading below 200 at 199.77, down by 3% today. I opened these at 180. Currently, they're going for 150. And then let's see what other trades I got going on. The UVXY cover call. UVXY still trading at 510. Very cheap, but trading UVXY is pretty difficult, I would say. You can't trade UVXY for long periods of time if you're planning to hold it for more than a few weeks. Usually not a good idea just because of the time decay that comes with it. I would rather trade just regular VIX options personally. If I were to redo that trade, that's how I would do it. Just regular VIX calls that expired in like March, April probably. Seen a lot of people piling in on VIX calls expiring in the summertime. May through like July, a lot of people piling into those in like large quantities, like in the millions of dollars. So that could be a decent opportunity. Currently it's trading at 20.8, so it's definitely in that low range of where it's been in the last year. You know, between 20 and 30 for the most part. We did end up coming below that for a good while. Traded between 25.85 and lows at 17. So volatility has definitely been decreasing since the beginning of the year. But given that interest rates are still going up and the zero data expiration options possibly distorting market volatility, you could see a decent rise later on. Bought 2 long calls for UVXY. I'd rather just buy long calls on VIX if you can. Robinhood doesn't offer VIX calls, unfortunately, but I know Aries does. How many Tesla contracts did I open? Just one. Just one of these. So assuming that Tesla will be below 205 by the end of the week on March 3rd. Do I have any Polygon Matic, or am I planning to buy? If so, what price? I haven't heard of Polygon Matic, so I have not been buying that one. If I can get out of these for maybe $40-$50 profit today, I might take it for Tesla. So if these trade down to 140 to 130, I think that might be worth taking profits on. If not, I'll probably just hold it into tomorrow after the event that's scheduled for today after hours. How many options trade do I have on currently? Let's see. 1, 2, 3, 4, 5, 6, 7. So these 2 are long-term trades. Leaps options. This one is from like a year ago. A Leaps option from a year ago. That's basically worthless at this point. But these 2, the SPY put debit spreads that expire in March. So that'd be 3 UVXC cover calls 4, 5, 6, I would say. And then the MAPS call, with it being basically worthless, I wouldn't really count on it. I usually keep between like 3 and 5 trades open at a time. Gold is still making its way up. 170, 120. Maybe even worth selling a cover call if we expect the dollar to keep going up. That's going to weigh negatively for gold. And then the Bank of America leaps put. Trading for 560 versus buying it for 720. So these are still down a decent bit. 37 strike price. My assumption, Bank of America will make its way down to 52-week lows. Let's see. Still a ways away from it. It's at 34 right now. 52-week low at 29. So still $5 off, or about like 18% or so. Is my new trade? Is your trade from yesterday profitable? Let's see. So the trades that I opened yesterday was that QQQ put debit spread that I already took profit on of like $50 or so. Let's see what other trades that I made. Let me pull up my account history, or I can actually pull up the Discord. That would be easier. Good morning. Welcome. All right, so got out of that trade. Cut losses on the 394, 395 SPY put credit spread. Tesla trade that I opened this morning. The put credit spread that I opened. Let's look for new trades from yesterday. So the 401, 402 call credit spread, I actually took profits on that at the end of the day. I expected that one to be a swing trade, but the profits were substantial enough by the end of the day. And I don't set profit goals or take cut losses at a specific percent. I usually just do it on a trade-by-trade basis. I feel like if you're going to say take profits at 30% or cut losses at 20%, whatever, you might as well just like develop an algorithm that'll do it for you. I do it based on a trade-by-trade basis. So there's no real rhyme or reason. The only kind of reason I would have is I feel like I've made either a substantial amount of profit on the trade. It's close to the strike prices that I chose, like for QQQ, or based on probabilities. So what is the probability of this trade working out or not? And then I'll take profits or cut losses based on that. So since I'm trading usually $1 wide spreads, if it's a debit spread, I'll close it based on my assumption of what's the probability of it working out. So if there's, say, a 60% chance of a $1 spread working out, a debit spread, I'll try to close it close to 60 cents. Sometimes I'll discount that by 5%, depending on how much time is left until expiration. The longer the time until expiration, the more you have to discount it. And then if it's a credit spread and there's a 60% chance, then I'll try to close it at 40 cents. So that's the way that I kind of think about closing options, rather than being very strict and saying I'm going to take profit at 30% or cut losses at 10% or whatever. That's the way that I see it. It's a method. It's not really, tried and true, and it's kind of hard to, it's not methodological. It's more so just based on, I guess, intuition. I've been trading spread options for 2 years now, so I have a good idea of what they should be valued at based on what prices the stock is trading for. Let me make sure that I type in all the trades that I made yesterday. So I got the SPY call credit spread already log that one in. And then I think I opened the put debit spread on Qs yesterday, if I remember right. Yeah, that one I closed today at 43 each. So that one was 60 profit that I snagged out of that. Let's see if there's any that I'm missing on this calendar. Nope. Just need to make sure that I have all the trades that I opened yesterday. Some new options alert. All right, so the SPY call credit spread I already put in. Put credit spread. I already put that one in. Assume that it would be above 396. Yep. And then 290, 291. Already got that trade. And that's all the ones from yesterday, so everything should be logged. So let's move over to the March calendar now. Type in the trades that I made this morning. So I got the Tesla trade was the first one, I think. Oh no, it was the put credit spread for SPY. I think I opened like 3 trades. So SPY put credit spread, which is a bullish neutral trade. Expiration was today. This is a day trade. Strike prices I chose were 393, 394. I only opened 3 of them at 20, and I ended up closing them at 31. Let's see. Tesla call credit spread, which is a bearish neutral. Expiration date is Friday. 210 for long, 205 short. I opened just one of them for 180 credits. And then last trade that I made. Actually, that was the last trade that I made. So 2 new trades today. Might open another one by the end of the day, depending on how interest rates and the dollar are moving. Currently, the dollar is hanging at 4.0. Or sorry, not the dollar. The 10-year treasury rate's hanging at 4.0. And then the dollar did end up pulling back probably off that 200 moving average line. Yeah, basically immediately rejected at the 200 moving average. So probably going to see a little bit of a rebound for SPY. Maybe not so much for QQQ, given that the 10-year is still at 4.0. What trades did I put on today? The SPY and Tesla trade. So these 2 right here. Tesla, assuming that it's going to be below 205 by March 3rd. And then the SPY put credit spread I already got out of. Oh, excuse me. This 395, 396 put debit spread has just been in and out of the money a shit ton of times. Last couple of weeks, it was trading for. Who bought this at 61 cents? I wish I could have sold it to them for that. That's crazy. Somebody would actually buy it for that price. But yeah, with the dollar going down, that's probably going to trigger stocks to go up if it continues. After getting rejected by the 200 MA, below 45 RSI, that does look pretty bearish to me. But on the counterbalance of that, you have the 10-year headed above 4, which is the first time that we've seen it above 4 in a while. Last time we saw it above 4 was back in November of 2022. So rates are rising. I want to check in on the FOMC watch tool, see where we're predicted to go for interest rates, and that might be the closing for today's live. What does Meta keep on pumping? God knows. Wow. Okay, so that's why you're seeing the rise in interest rates. The odds of going to 50 basis points for March climbed from, I think it was 27% this morning. Now it's finally above 30, with the odds of 25 basis points dropping from, 76% down to 69% since yesterday. So finally seeing some movement for the Treasury yields based on the increasing odds of going 50 basis points for March meeting. And let's see if the July rates have changed. So this, now we're expecting 5.5 to 5.75% for the peak funds rate in July. And this is up from 34% yesterday. So that's why you're seeing a rise in the Treasury yields. The reason why you might not be seeing the rise out of the dollar, though, is if other central banks are more hawkish than we are, if they're going up faster than we are in their interest rates, the foreign exchange is going to manipulate the dollar to come down. What stocks will get pummeled if they do 50 basis points? It would be your QQQ stocks mostly. So high growth tech names would be your short bet for the 50 basis point rate hike. House committee to pass a vote to ban TikTok. Yeah, not too surprised there. Weren't they trying to ban it back in Trump's day? Like 3 years ago, too? They're finally getting around to that. I think it's just because of the data collection, probably. And generally how toxic TikTok is compared to what you see like over in China. The discrepancy between China's TikTok and America's TikTok is just so... It's also a reflection of like societies, though, I would say. Like our society values entertainment and shit posting, whereas China in their society is more, science, tech-based, mathematics. So that's what's on their TikTok versus ours is just a bunch of, I don't even know at this point. TikTok is a wild place. And there is some, informative content on TikTok. I'm not just going to say everything on there is shit, but generally I would say that. But yeah, that wraps up today, and I will catch y'all tomorrow at 9:30. See you, everybody.